The 2024 Indian budget, presented by Finance Minister Nirmala Sitaraman, has been met with a wave of criticism and disappointment. While the government hails it as a growth-oriented budget, many experts and citizens see it as a missed opportunity. The budget fails to address the pressing concerns of rising inflation, job losses, and economic distress faced by millions of Indians. The budget's focus on infrastructure development and capital expenditure, while important, seems to overlook the immediate needs of the common man. With inflation eroding purchasing power and unemployment at alarming levels, the budget lacks concrete measures to provide relief and stimulate demand. Instead of addressing these critical issues, the budget introduces controversial measures like the increased transaction tax, which will disproportionately impact small investors and traders. This move has further fueled the perception that the government is out of touch with the realities faced by ordinary citizens. The budget has also been criticized for its lack of focus on social sector spending, particularly in areas like healthcare and education. With the COVID-19 pandemic exposing the vulnerabilities of India's healthcare system, the minimal increase in healthcare allocation is a cause for concern.
The most glaring omission in the 2024 budget is the lack of direct relief measures for the common man grappling with soaring inflation. The prices of essential commodities, fuel and food items have been on an upward spiral, putting immense pressure on household budgets. Despite this, the budget offers no significant tax breaks, subsidies or direct cash transfers that could provide immediate relief to struggling families. The government's argument that its long-term infrastructure investments will eventually control inflation rings hollow for those struggling to put food on the table today. The government's decision to not increase income tax slabs further adds to the woes of the middle class whose real incomes have been shrinking due to inflation. This lack of sensitivity towards the plight of the common man is a clear indication that the government is more concerned with appeasing big businesses and investors than addressing the needs of its citizens. The absence of a comprehensive strategy to control inflation and provide relief to struggling households is a major failure of the 2024 budget. It reflects a disconnect between the government's priorities and the ground realities faced by millions of Indians.
One of the most contentious aspects of the 2024 budget is the introduction of a higher transaction tax on stock market transactions. This move has been widely criticized for disproportionately impacting small investors and traders who are already grappling with market volatility and economic uncertainty. The government argues that the increased transaction tax is necessary to generate revenue and curb speculative trading. However, critics argue that it will stifle retail participation in the stock market, which has seen significant growth in recent years. The increased transaction costs will make it less attractive for small investors to participate in the market, potentially driving them towards riskier investment avenues. This move contradicts the government's own stated objective of deepening the Indian capital market and promoting financial inclusion. Moreover, the increased tax burden on traders will likely be passed on to investors in the form of higher brokerage fees and other charges. This will further erode the returns for small investors, making it even more difficult for them to create wealth and achieve their financial goals.
Section 4. Unequal distribution, the politics of resource allocation. The 2024 budget has also come under fire for its skewed resource allocation, with allegations of regional disparities and political favoritism. Critics argue that the budget favors states ruled by the ruling party while neglecting those ruled by opposition parties. This disparity in resource allocation is evident in the allocation of funds for infrastructure projects, social sector schemes, and disaster relief. States aligned with the ruling party seem to receive a disproportionate share of the pie, while others are left to fend for themselves. This partisan approach to resource allocation undermines the principles of federalism and equitable development. It creates a sense of resentment and alienation among states that feel neglected and discriminated against. Such politically motivated distribution of resources is not only unfair, but also detrimental to national development. It hinders the overall progress of the country by creating regional imbalances and fueling social unrest.
Section 5, Finance Minister's Balancing Act, Public Perception versus Policy Reality. Finance Minister Nirmala Sitaraman has projected the 2024 budget as a bold and visionary document aimed at propelling India towards becoming a $5 trillion economy. However, her public pronouncements stand in stark contrast to the ground realities and the actual impact of the budget proposals. While the Finance Minister speaks of inclusiveness and growth, the budget itself lacks concrete measures to address the pressing concerns of inflation, unemployment, and social inequality. The disconnect between the government's rhetoric and its actions has eroded public trust and fueled skepticism. The Finance Minister's attempts to defend the budget's shortcomings have further alienated sections of the population. Her assertion that the government is doing its best in challenging times rings hollow for those who are bearing the brunt of the economic slowdown and rising costs of living. The Finance Minister's credibility has taken a hit as the budget has failed to live up to its hype. The public perception is that the government is out of touch with the realities faced by ordinary citizens and more concerned with promoting the interests of big businesses and the elite.